And we're going to stay on that subject for our business news now, on the stakes really on that meeting between Joe Biden and Xi Jinping, specifically what it could mean for trade between the two economic powerhouses. And our business editor, Charles Pellegrin, is here to tell us more about it. Charles.
Morning, Stuart. While diplomatic relations between the two countries can be defined by their differences and tensions, it's important to remember how interdependent these economies are. Despite the rise in trade restrictions in the two countries that we've covered extensively in 2022, Beijing and Washington were each other's biggest trade partners on the world stage. According to the U.S. Trade Representative, last year, U.S.-China trade totaled over $750 billion, with a big discrepancy, as you can see, between how much the U.S. exports to China and vice versa. U.S. goods and services headed to China totaled $195 billion, while trade going the other way was worth $562 billion. That trade deficit has been a source of concern for Washington, but the real sticking point has to do with geopolitical and ideological differences. The two countries see each other as systemic rivals that threaten each other's national interests, which means that economic sectors that affect national securities, like semiconductors, which power electronic devices and systems, are subject to more scrutiny. Under the Biden administration, the U.S. has restricted the export of technology that would allow China to develop the most advanced microchips, specifically the kinds of chips that power artificial intelligence systems. These measures often lead to countermeasures, which can affect trade and business opportunities negatively. U.S. chip giant Micron, for instance, has been the subject of an investigation by Chinese authorities since April, and some of its products have been banned on the national market. This kind of response has raised concerns among foreign investors about the business climate in China and has led Washington to accuse Beijing of engaging in economic coercion, something that U.S. Foreign Secretary Antony Blinken alluded to in a speech to APEC. Take a listen.
The United States believes in that vision, a region where economies are free to choose their own path and their own partners, where problems are dealt with openly, where rules are reached transparently and applied fairly, where goods, ideas, people flow lawfully and freely. We have made real progress toward that more prosperous future. Just since the creation of this forum 3 decades ago, GDP in the region has increased from $19 trillion to $52.8 trillion.
Well, in spite of these differences, the rewards for closer, warmer ties between the two superpowers are obvious for the business community. Bloomberg, for instance, is reporting that depending on how that meeting between the two leaders goes, the Chinese government could unveil a commitment to buy Boeing 737 MAX jetliners, which have been going through a bit of a commercial freeze in China since 2018, before 2 crashes of the model led to a grounding order. During that time, its rival Airbus has continued to rake in orders for its A320. By 2025, they'll have over 1,200 A320s used in China, while Boeing will have stagnated at 965. When it comes to business interests, there is a clear upside in seeing China and the U.S. come together again.
Good to analyse all of that. Thanks for that, Charles. What about the rest of the business news then, the markets to start with?
Well, investors looking ahead to that meeting between Xi and Biden, but also buoyed by the soft inflation reading coming out of the U.S. on Tuesday, which is boosting hopes that the U.S. Federal Reserve is getting closer to an end of its rate hike agenda. Beijing, meanwhile, posted better than expected retail and industrial data for the month of October. As you can see, the Shanghai Composite up over 0.5%. The Hang Seng leading the gains in the region up over 3.71%, and the Nikkei closing up 2.5%. And here, in Europe, let's have a look at the European markets as well, with the FTSE in London up just over 0.8%, the Paris CAC 40 up over 0.33% on the back of softer consumer price data coming out of the U.S. And here in France, the unemployment rate rose faster than expected to 7.4% in the third quarter. It was a 7.2% in the second. This means 2.3 million people are actively looking for work in the country. That's the highest level since the second quarter of 2022, and potentially shows that the rate hike policy enacted by the European Central Bank is cooling economic activity. Annual inflation in October in France came in at 4.5%, slowing down thanks to a slowdown in energy and food prices. And finally, a day after a government-backed rescue package was unveiled for German group Siemens Energy, the company reported a 5 billion annual euro loss this Wednesday, much larger than the loss of several hundred million euros the year before. It was dragged down by its wind power subsidiary Gamesa, which has faced long-running technical problems with its onshore wind turbines, with huge sums, Stuart, dedicated to repairs.
Sean, thanks so much. Sean Pellegrin with the business news for you here on France 24.